JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 15th of March 2021. So yep, welcome everyone. Welcome to this Monday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, the first one I want to pick up here is the German index DAX, and yeah, I mean it's currently not really near the all-time high and not near Friday's low, so it's kind of stuck in between that. And basically, it's for now, what I'm going to say here, that we're slightly on the neutral side. And if you remember this morning, I said to you guys that in a way, a bit of a decline here could be possible, and let me just actually clear up this chart a little bit, to be honest, because again, we're kind of in a way, there's a lot of levels here, so let me just start a bit of fresh here. So this morning, if you remember, I talked about maybe seeing a small little retracement here to the downside. So if you draw a little Fibonacci here from the low, from the lowest point, the low of 5th of March, and actually the lowest point of March. Yep, there we go, that's correct. And we drag it to the highest point, the current highest point of March. Then yes, we'll see that the 23.6% retracement has not been tested yet. So maybe we could it still has a chance to reach that area. If we take it from the lowest point of February, and let me just drag the lowest, capture it now. The lowest point of February will be here, but let's grab it from here, from this recent low here, the 23rd of February, and if we capture it from here, then yes, you'll see that the 23.6% retracement is near the 14,375 territory. So, long story short, there is a chance for this one to correct lower. First, I'm going to keep an eye on this level, the 14,423 territory. That's going to be my first little target. If the index struggles to overcome the current all-time high, and the current all-time high is near the 14,595 level. If this area here, the 23.6% retracement, it does provide good support, we might see a nice rebound, and then maybe another attempt to test the current all-time high and maybe break it as well. So long story short, guys, for now there is a bit of interest here for the downside, maybe just for slight correction. However, I will say it's still very tricky, so probably keep your eyes on this 23.6% retracement instead, this 14,423 level instead, because if the index struggles, let's say, to drop below this, then yep, a nice rebound here could be possible. If we start seeing a drop below this area, then maybe this could lead to a bit of a larger correction to the downside towards this this short-term tentative upside support line drawn from the low, the 26th of February. And then, of course, there's a bunch of levels here that we could test on the Fibonacci, but we'll get to that point if we see a drop below the 23.6% retracement here, below this 14,423 territory right here, and then yes, we'll take it from there. Now jumping into Dow Jones Industrial Average, and here you can see that the index on Friday did push further north. I mean, it created a new all-time high, reaching the area around. Let me just grab this one very quickly. Reaching the area around, or actually, sorry, it wasn't on Friday, it was today. The market is already open, but on Friday it reached the area at 32,793. But today the index is already open due to the time-saving changes. So we can see that the Dow Jones Industrial Average is already open. So yeah, I mean, it's pushing further north. I mean, we are carefully aiming that psychological 33,000 territory. Now, I'm not saying that this might reach it today, but of course it has a very strong chance of doing that. So for now, what I'm going to do here is I'm going to probably wait this one out, because I'm going to keep an eye on the Friday's high, on the last week's high near the 32,793. I do understand that we are above it, but I would like to be a little bit more on the safe side. And yeah, I mean, although the psychological 33,000 level is quite tempting, I will carefully aim for that level. But if suddenly the index starts dropping below the 32,793 zone right here, then yes, we could go for a bit of a bit of a corrective move here to the downside. So bear that in mind. DXY very quickly. So the dollar index still at the same level where it was this morning. So to be honest, not much has changed here. So the same analysis remains. And the idea here is that if it pushes higher and then breaks above the high of last week near the 92.50 zone, then yes, we could go for a bit of a larger correction to the upside. So keep that in mind. In case of the downside, well, I would prefer to wait for a drop below the 100-day EMA, below the 21-day EMA here shown as the green and yellow lines respectively, but also maybe just to strengthen the downside scenario, a drop below the 91.05 level could be ideal here. And yep, we could see a bit more declines, let's say. But again, at the moment it seems that the downside scenario is slightly off the table in the short run, but again, certain breaks here are needed. If this level is too much for you guys to wait, then of course keep your eyes on the Friday's high, which is roughly around the 91.96 zone, and as it pop above it may increase the chances for this index to drift further north. Silver, jumping into silver, and here you can see that the bulls are still trying hard to keep the commodity above this upside line here, drawn from the low of the 18th of March of 2020. However, as I mentioned to you previously, I would actually prefer maybe to see a push above, well, previously I've mentioned this level, the 27th territory, but now looking at this picture, I mean, we could probably start looking at some higher levels a little bit earlier if we get a break above this 26.45 territory marked by the high of last week. At the same time, the price would be placed above the 21-day EMA and more buyers could join in. For the downside, I need to see a drop below the 25.46 territory right here in order to get a little bit more excited with the downside. Ethereum is drifting lower today, however still remains above this 21-day EMA shown as the yellow line. So in other words, for now it's I would say it's a bit still looks quite positive, but if it suddenly starts dropping below the 21-day EMA and falls below the 1666 territory right here, now that's where we could start looking at maybe a bit of a larger correction to the downside. Until then, I'm still sticking to the upside here, guys, and I want to see how, I mean, if we will rebound nicely from this 21-day EMA. So far we're seeing that. So yes, the crypto is rebounding from this 21-day EMA. Can it push back up here? Well, yes, that's the kind of the preferred scenario right now. However, if you want to be a little bit more on the safe side, you could wait for a push above this 1942 territory here, marked by the high of last week. And then, yes, we could go for some higher levels. AUD-CHF, very quickly on this. So AUD-CHF is is well, drifting to the downside here a little bit. However, still, don't get me wrong, we're not far from the February high, which is roughly around the 0.72 or 0.7260 zone. Yes, the pair is drifting lower, but again, let's see if this is not going to be just a temporary kind of move here to the downside. Let's not forget that from the very, very short-term perspective, we are trading still above this upside line, although a tentative one, but nevertheless an upside line. Let's see if it can hold. If it can, then yes, a nice reversal here back up could be possible. However, if you want to be a little bit more on the safe side, guys, well, I mean, you could wait for a push above the highest point of February near the 0.7260 and then go for some higher levels, because this way the pair will confirm a forthcoming higher high. Jumping into NZD-JPY, so the pair is still trading above this 78.21 zone, so in a way everything is looking quite positive here. However, let's be very careful. If suddenly the equity markets start reversing sharply to the downside, then maybe yen buying might get increased. But at the moment, equities seem to be pushing higher. Let's see if the if we can get a further move north here on NZD-JPY. My next target is the highest point of February near the 79.21 zone. That is, of course, if the rate continues to trade above this little hurdle, the 78.21. For the downside, I need to see a break of this upside line here, and yeah, I mean, break below this upside line and a drop below the 21-day EMA could strengthen the downside scenario, and we could see this one drifting towards the 76.98 zone or even below that. So keep that in mind. USD CHF, very quickly on this, the pair is stuck near this 0.9296 territory. As you can see, this area somehow is providing very, very good resistance. If we do get a push above this and we see the daily candle remaining above this area, then yes, this increases the chances for this pair to move a little bit more to the upside. Initially, we'll aim for the highest point of the current highest point of March, near the 0.9375 territory, and then of course we'll take it from there. But if this hurdle here, the 0.9296 zone, continues somehow to provide resistance, then maybe a bit of a corrective move here to the downside towards this upside line could be possible. GBPJPY, very quickly on this. So for this, let me just clear up the chart here and have a nice fresh start. So as you can see, and this is a daily chart, by the way, look at the steep up move here. I mean, this is just has been a short seller's nightmare. So yep, I mean, we are trading above a bunch of upside lines here, all maybe tentative ones, but nevertheless upside lines here, which are still intact. And one of the first ones that I'm keeping an eye on here is this one drawn from the low of the 4th of February, and the lowest point of February. And so far you can see that yes, we are trading nicely and comfortably above that upside line, but yeah, I mean, for now it's very tricky to find a good ceiling here, because the pair just continues to travel higher here, and well, I mean, we can just probably start assuming that maybe, just maybe, this level right here, the high of the 26th of April of 2018 could do the trick here, could maybe stall the acceleration. But the next target here is, of course, the near the highest point of April of 2018, and that's roughly around the 153.85 territory. But basically, you can see that there are still strong potential targets here on the daily chart. But given the fact that we have already I think we're overstretched here a little bit. However, as long as these upside lines remain intact, then guys, I mean, there's still a good chance for this one to drift higher. Don't get me wrong, at some point we will have that nice little correction here to the downside, and one of the main lines that I'm keeping an eye on here is this one, taken from the low of the 18th of March of 2020, and yep, as you can see, there's plenty of room here for a nice correction. However, will we see that? Well, we'll just have to wait. But again, if we want to see that larger correction, then of course a bunch of these areas need to get broken first. So for the downside, I would say, well, we need to see at least a break of this upside line here, drawn from the low the 4th of February, and then we could take it from there. And finally, EURUSD. So the pair is drifting to the downside a little bit. However, it is not, let's say, changed much since the morning video, and basically it's still trading below the 1.1952 territory, but not really moving much towards that 200-day EMA. This is my target for now. If the rate continues to trade below the this 1.1952 zone, if it remains below this, then yes, like I said, I'll target this 200-day EMA. But if it starts climbing up here and breaks above the 1.2023, at the same time would be placed above all of its EMAs then, and yep, maybe some more buyers could join in here and drive this one towards this downside line taken from the high of the 6th of January, guys. So basically, in other words, this move higher could still be seen as part of a temporary correction. So for now, like I said, be very careful here with this. And as I said, if the rate remains below the 1.1952 zone right here, then yes, I'll continue aiming for this 200-day EMA. So guys, that's it for this session. I'll have to wrap it up here. Thank you very much for joining in and watching this one till the end. If you want to catch my video tomorrow morning, as always, my Trader's Espresso, 7 o'clock GMT time. For now, guys, I hope you have a wonderful evening. Stay safe, and I'll see you later. Thank you very much, and bye-bye.